23. Al from Aliom, with that upgrade today, do you think maybe the market is underdoing the issue of mortgage rate increases by the banks? We know that they can't do anything to the election. We've been talking about whether they might do it towards the end of the year. Should we just be admitting it? They're going to do it?
I think yes, perhaps that is a general consensus that yes, that will happen. I think we are really crystal balling a few things here, and I think that's always one risk. Look, I think banks are oversold. That's my opinion, and I think that certainly this renewed interest in that sector is on the back of them being hampered by the eurozone debt crisis and these concerns. I think that. That perhaps the next 6 months is certainly going to be a choppy one, but I think we're starting to see this interest in these banks, and I wouldn't forget about some of these other smaller banks, someone like a Bendigo, for example, as well, which we ran some technical analysis on last week, and I think looks quite attractive. And we
so basically, from a technical point of view, they're not necessarily fundamental.
No, that's exactly right. And on the charts, and when we're looking at the support there in the MACD and whatnot, it's quite an interesting play. So look, I think banks will continue to be in the papers and hit the headlines because there's been so much focus on our resource sector as well. So they really haven't had the limelight for a while.
Yeah, so funding pressures, well, I mean, we'll continue to talk about them. We'll see if that it equates to a mortgage rate increase from them. The other thing is, with this note today, with Macquarie upgrading Westpac, the other thing that's happened is that ANZ drops off the conviction list, or the outperform conviction list of Macquarie. It's replaced by CBA. Also on that list, or retained on that list, I should say, Boart Longyear, News Corp, QBE, Rio Tinto. Qantas removed, Brambles on an underperformed conviction. Yep. Any of those standing out to you?
I'll go through them all. Oh, no. Okay, ANZ. Look, I'm speculating Macquarie's views here, but look, ANZ on the back of that Asian exposure, perhaps looking for banks that have more of a domestic focus, that being obviously Westpac and CBA. NAB has that quite significant UK exposure, and UK, I really think, is an area that we have to watch closely. We saw the IMF cutting the UK's growth forecast for the second half of this year and all of next year as well. So I think that UK exposure for NAB is not a huge point to break that on. So that's for the banks there. What else do we have on that list?
We had on the list Boart Longyear, News Corp, QBE, Rio Tinto.
Okay, yeah, sure.
On that list.
So the Boart Longyear, which I think we touched on before when we were speaking about Orica, when we were speaking about IPL, it gives you that exposure to resources. It gives you that exposure because it's a mining service provider there, without having that single stock or single resource exposure that you'll find from someone like a Fortescue or an Oz Minerals or someone like that. So it does give you more of a hedge, global exposure, and there was quite a lot of concern around Boart about the resource profit tax. But look, 50% of their business comes from the US. They've got good exposure in Africa, in Asia, and about 25% or 28%, I think it was, comes from Australia. So they are globally well hedged, and they are well hedged in terms of a broad spectrum of resources there. So I like that style there. News Corporation is that US exposure, that US recovery story play there. Quite undervalued stock there. And look, I agree with Macquarie there. I'm very bullish the news story there.
And News Corp, in terms of let's broaden it out to the media sector generally. Things have turned the corner for the media space.
Look, they have, and we've been waiting for a while for this news. So I remember we were speaking about this 8 months ago when Murdoch was talking about starting to charge for online content. And we looked at the example of someone like the Wall Street Journal on your BlackBerry or on your iPhone, and if they just charge $1 per subscriber per week, that would add $100 million to their bottom line per annum. I mean, it were huge numbers and very little expenditure to actually start charging for that side. So I think News Corp there are some wonderful opportunities that might pan out for the stock. I certainly think it's been weighed down quite heavily on negative US sentiment. I think perhaps people are expecting some positive news to come through perhaps slightly sooner than it has, hopefully that it will come out over the next 6 months. So I agree. I think News Corp is very interesting.
All right, let's mention another broker rec today, which was on Santos. It got an upgrade. I guess the broader issue again here is about consolidation in this space. Everyone seems to agree that consolidation is what's needed to make all of this even viable up there in Gladstone.
No, it is, and that's exactly right. And we saw with the LNG market, it sort of fell out of fashion for quite a long time, and now there is some interest sort of starting to come back into it. There's with liquid natural gas, it's always quite a tough process to get it from from the start to the end. And I think that Santos has felt some real pressures there. I think that there was a disaster that was up in Indonesia with all the mud that was erupting from that thing, and I think they were sort of tainted with some quite bad press for a long time, and people were really focusing more maybe on an oil search rather than a Santos. But I strongly think that we're starting to see a bit more interest across the board there in that sector. So your Santos is your Woodsides and your oil search.
You've still got those investment decisions to come through the course of the year. Do you consider it a risky play at all, or have we got enough offshore interest to keep all of that afloat?
Yes, I do. I think that LNG and those companies, there is a significant amount of risk, be it sovereign risk, be it the fact that these historically there's been extremely large blowouts in terms of timeframes for these projects, and they hemorrhage money on a daily basis. So it's really something which they can't afford. So yes, it is a risky play. Do they look attractive at these levels? I certainly think someone like an oil search, is a stock to keep in mind.
Okay, good stuff. Can I, at this point as well, just mention we've got the S&P ASX 200 0.2% stronger, so that's a gain of about 9 points. I want to mention some of the top and bottom movers at this point, and top 5 is in descending order. Elders with a 13% gain, White Energy with an 8% gain, Linus Corp is higher by 7%, Eldorado Gold 6% stronger, and Asenco up by 5.6%. Any that stand out to you there, Al, that you like? So Elders, White Energy, Linus, Eldorado and Asenco, they're running out the top 5 today.
Look, I think Eldorado is obviously that the gold sector being a very hot topic of conversation. We have the bears saying gold's at these levels and it's too high. There's a gold bubble, so to speak. We've seen that as a safety play, and then we've sort of seen a slight movement away from that, from a safety play into some of the currencies and into some of other non-precious metals such as a copper. So look, I think gold will continue to be a real hot spot and some of which you must look at. Copper is one there, and look, I think that when I left the office there was Equinox came out of the gates quite strongly, and
Equinox is in about 10th spot at the moment, so 4.1% gain.
And that was sort of a strong night on Friday for copper. There's Elders, I'd have to say, perhaps people were just looking at a bit of bargain hunting there. I'm not entirely certain, but it certainly doesn't surprise me that the resources and these mid sort of tier ones remain in focus.
And why we talked earlier about the fact that the offshore interest shows maybe our market's a bit undervalued right now. Is that necessarily specific to any end of the market in terms of those mid-tier miners? Are they looking particularly good at the moment, or?
Yes and no. I think what they're looking for is value, and we've seen that across the board in terms of pharma companies, in terms of coal companies, perhaps these single stock assets. We know that people like China like to own the entire production line from start to finish, and so they'll obviously be looking around. It's just a matter of offshore companies really having faith in Australia's economy and seeing this ongoing data coming out that we are in a very good stance, good position. And the second thing is this stock oversold in light of the resource profit tax. Did that really hurt these stocks a great deal? This news flow out of China, which everyone took as being really negative, did that further push these stocks down now? And now people are saying, you know what? These stocks have got quite a good pipeline, or an exceptional pipeline. They're well capitalised. They've got a great board of directors. There's great demand coming from these emerging markets. So is it the right time to start buying?
Good stuff, Al. Thank you so much. And viewers, when we get back